Okay, what's up guys? So this is Training Ground episode 3. We are diving into trends. So, what are trends? Trends in the market indicate where the price is moving in the markets. So for example, this would be a bullish trend. As we can see, price is moving upwards from around 17.5k all the way up to $18,000. And a bearish trend is basically the opposite of this. We are moving from a higher price to a lower price. Here we're going from 18.5k until 17.5k. So that's basically $1,000 in difference. So why are trends important? They basically rely on, market makers usually rely on fundamental and technical cues to decide where the market is moving. So news, technical analysis and whatnot. But if you are not an institutional trader and you want to use smart money to spot trends, it's actually pretty easy. So an uptrend is characterized by higher highs and higher lows. So I will draw just a basic demonstration. This is something you will see. So maybe price starts from here and then we make a high right here, then a low under that, but then the next high is higher than the previous one, and this low that we make will be higher than the previous low. So we are just trending in an upward motion basically in the market. And then let's look at a bearish trend, which is basically the opposite. So we're starting from a higher price, we go down, move up, go down again, move up a bit, and then boom, etc. So we start from a higher price, and then we make a low, and then the next high we make is lower than this previous high around here. The next low will be lower than the previous low, next high will be lower than the previous high, and then this just goes on and on and on. So let's spot a high. So what's a high? It's made up of two candles. So I'll do it right here for you guys. This will be our bullish candle, which will be green for me. Boom. You can modify your chart colors, but whatever. So this is a bullish candle, and then we make a bearish candle next to this one, like so, maybe. And then we are going to do this in red because this is a bearish candle. Boom. So these two candles will make a high for us. So if you see this in the market, it usually indicates high. So how do we determine the actual high for a breakout structure in the future, which will be in like 2 or 3 episodes? So we want to take a look at the highest wick. So maybe we have this wick, which will continue up here, and then this has just a smaller wick. The high will be right here. Let me do this real quick. So right here, this will be the high of the high, basically like the peak of the high. So a high is formed of two candles, this a bullish candle and this one a bearish candle. Let's look at the chart real quick to identify this. We are in an uptrend here because we start from a lower price right here, and then we make a high right here, we go down a bit, this is still a bit higher than this low, and then we make a really big push, we go lower again, push up, go a bit lower again, push up, go a bit lower again. So then we make a low here, and then we make a high right here, then we drop down a bit, make this low which is just a bit higher than the previous low, and then we make a high which is considerably higher than the previous high. I'm just saying high so many times. Then we have this low which is considerably higher than this previous low, and then we just continue in this trend basically. So this high is higher than this high, this low is higher than this low, blah 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 blah, etc. You know, and then I will show you guys the high basically in the markets. So let's see this one here. So this is our highs, and then let's look at the markets. Okay, so we have a bullish candle here and the bearish candle here. The wick of the highest candle will be right here. So if you break above this, that will mean a breakout structure as well. Plus we're continuing the trend. Let's look at this one. We see bullish candle, then a bearish candle. With this bullish candle, we push above this, so we continue the trend. We see another one right here, bullish candle and the bearish candle, and now the bearish candle's wick will be the higher wick, so that means that's our high that we need to break. With this bullish candle, we see that it got broken. Boom, we go up a bit, you know, you see another high, a bullish candle and a bearish candle, and then it just continues, as you can see, all the way up to like 18.4k, and we started at 17.5. So let's look at a low. So a low is basically the opposite, so I will just kind of like redo this for an easier explanation. So yeah, now you just like switch these two candles. Boom. This will be your low. We have the wicks right here. Boom, like this. So this is your low. It's characterized by a bearish candle first and then the bullish candle, and the low will be the lowest point of the two candles wicks. So right here, this is going to be your low. Let's look at the markets to identify a low. I will search for a downtrend. This is a pretty good example, just a clean continuation here. So we start from a higher price right here, and then we come down a bit, and then we make this low. Let's look at it real close. Boom. We have this bearish candle, and then we have this bullish candle. So the low will be the lowest part of the two candles wicks, so it's this one. Then we break this low with this huge bearish candle. Then we make another low right here. We have a bearish candle and a bullish candle. We can mark out the lowest part of the two candles wicks here. We come here a bit. You see this big bearish candle right here. We break below the low, and then market just kind of chops. But then we kind of continue the downtrend here, because this high is lower than this high, or even this high. It's usually the most recent highs, but I mean sometimes the trends can kind of like chop a bit, and then the trend is not as clear in choppy markets like consolidation periods. But overall, if you look at this, it's still a downtrend. I mean, you see this high, lower low, kind of a lower high, just like a bit. It's an equal high, but we can call this a bit lower. And then we go down a bit, up, down, up, and then we see a really big break below here. And then we just continue the trend. I can draw it out. So boom, boom. We can go down a bit more, you know. So this is how you identify the trends, how you identify highs, how you identify lows. So I don't think I can dumb this down more than I already did, because this is basically like the dumbest of the dumbest of the dumbest concept to grasp. Basically, you can trade with trends. That's what smart money is. You trade with the institutions, not against institutions. So you try to find where the market is actually trending, where the institutions want to move the market, so you trade with them. The trends alone are not like a great strategy, so you cannot only trade trends, because you need to have a good entry, and that's why the next concept in the future will focus on more on like entries basically, and how to actually get into the market so you can continue the trend. Or what you want to do is like catch the next trend. So we have like a downtrend here. So we're just coming down, coming down, coming down, coming down, and then suddenly we see a downtrend. You know, we identify the downtrend, and then we see that we formed the high, and then down here we formed a low which was higher than the previous lows. So the market just starts going up, 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 and then we get to this point, we get to the high right here, and then we get a break above the highs. And then what happens is we start an uptrend. Look, we start an uptrend. From this break, from this single break, we start an uptrend. Boom. This goes up until like 18K. So you have plenty of opportunity in the market to trade. And we are going to be focusing on entries and how to move with the trend and how to catch like this reversal right here or something like this to actually get ahead. I will also give you guys homeworks. Identify trends, 5 trends in the market, mark them out, find some highs, find some lows, at least 5 of each, 5 lows and 5 highs, mark them out, download TradingView, do whatever you want to do. Just do the homework for you guys. That's what I ask. And write down everything you learned in this video that's actually useful. From the whole 10 minutes of me yapping, just write down like 5 key features of highs, lows, and trends. That's it. And we will be focusing on fair value gaps, etc. You can join the Discord. We have a live call every single week that I'm still doing. There's a few people, good vibes, join. If you guys have any questions, leave a comment, do whatever you want, and peace out.